Welcome back to Explain the Charts, your go-to source for unbiased market insights. Today, August 15th, 2025, we're conducting an in-depth analysis of the USDCHF currency pair, meticulously combining the latest news with comprehensive chart data. Let's begin by understanding the current market sentiment influencing USDCHF. Recent headlines present a complex picture. We're seeing strong expectations for multiple Federal Reserve rate cuts, a factor that fundamentally weakens the US dollar and is typically bearish for USDCHF. However, counteracting this, news reports also indicate that recent US tariffs are weighing on the Swiss franc, introducing a bullish dynamic for the pair. Just yesterday, on August 14, 2025, the USDCHF actually experienced a notable uptick, closing around 0.8075 after hot U.S. producer price index data provided a temporary boost to the dollar. This immediate reaction demonstrates the push and pull of conflicting fundamental forces in the market. The overarching narrative of anticipated Fed rate cuts sets a long-term bearish tone for the U.S. dollar, but short-term economic releases can cause significant deviations. For traders, understanding this dichotomy is crucial for navigating volatility in the short and long term. Now, let's turn our attention to the daily chart to grasp the broader structural trend for USDCHF. Observing the price action since April 2024, it's evident that USDCHF has been in a pronounced long-term downtrend. The pair consistently formed lower highs and lower lows, indicating a sustained depreciation of the US dollar against the Swiss franc. A critical period to highlight is the sharp decline that initiated around April 2025. Here, the price plummeted from highs near 0.91, breaking through multiple support levels with significant bearish momentum. This steep drop directly correlates with the market's increasing certainty regarding aggressive Federal Reserve rate cuts, validating the long-term bearish fundamental outlook. The 52-week trading range for USDCHF, spanning from 0.79 to 0.92, accurately encapsulates this significant bearish shift. This clearly defines the historical boundaries within which the pair has operated. The downtrend suggests that while bounces are possible, the overall path of least resistance continues to be downwards until a major catalyst or technical reversal pattern emerges. Prior resistance levels around 0.88 to 0.90, once broken, have continued to hold as overhead supply for price rallies. Let's zoom in on the daily chart's most recent activity, focusing from March 2025 through yesterday's close. Following the significant drop in April, USDCHF entered a period of consolidation, largely treading water and wavering above 0.8050, as highlighted by the news. This price action indicates a battle between sellers trying to push the price lower and buyers defending key support levels. The chart shows a relatively tight range, with strong support forming around the 0.8020 to 0.8050 area. Every time the price tests this zone, buyers step in, preventing a deeper breakdown, making it a critical level for current market stability. On the upside, immediate resistance has emerged around the 0.8080 level, with prior swing highs near 0.8150 and the reported 0.8170 acting as stronger ceilings. The impressive bullish candle on August 14th, fueled by the higher-than-expected PPI data, demonstrates that while the long-term trend is bearish, significant fundamental surprises can still trigger strong short-term upward moves. This short-term strength has brought the price towards the upper boundary of its recent consolidation phase, testing crucial resistance. To gain a more granular perspective on the current trading environment, let's examine the 15-minute chart for the last few days. Here, the precise nature of the wavering above 0.8050 becomes incredibly clear, illustrating the intraday volatility. We can see multiple instances where the price attempted to break above the 0.8070 mark, only to be rejected and pull back, perfectly aligning with news reports of the pair being capped below 0.8070. These rejections suggest significant selling pressure at those higher levels in the short term. Conversely, intraday dips towards 0.8050 and 0.8040 are consistently met with buying interest, confirming their immediate support role. Transaction volumes remain robust across these movements, indicating active participation from both retail and institutional traders within this tight range. For short-term traders, this channel-bound movement presents opportunities for ranged trading strategies, buying at support and selling at resistance. However, it's crucial to identify clear breakouts from this range to avoid getting caught in whipsaws. A sustained close above 0.8080 on this time frame, especially accompanied by increasing volume, would signal a potential short-term bullish bias and possibly lead to a retest of 0.8150. Conversely, a break below 0.8040 with strong volume would open the door for a retest of the critical 0.8020 support, aligning with renewed bearish sentiment. So, what's our comprehensive outlook for USDCHF? Let's recap the important price levels and potential scenarios. In the short term, USDCHF is likely to remain largely confined within its current consolidation range, approximately between 0.8050 and 0.8080. A bullish breakout above the immediate resistance of 0.8080, especially if reinforced by continued strong U.S. economic data, could see the pair challenge 0.8150 with a 65% likelihood, potentially extending to 0.8170. This would require a significant shift in market perception of the Fed's stance or further strengthening economic indicators. On the bearish side, a sustained break below the critical 0.8050 support, particularly if upcoming Fed confirms aggressive rate cuts, would likely target 0.8020 and then the 52-week low near 0.79. We assign a 75% likelihood to this bearish continuation in the medium term, given the prevailing long-term downtrend. For long-term investors, rallies towards the 0.8170 to 0.8200 area should be viewed as potential shorting opportunities, aligning with the expected fundamental weakness of the US dollar. Key things to look for in the coming days and weeks include the release of U.S. jobless claims and any further statements from Federal Reserve officials regarding interest rate policy. These events will be crucial catalysts for the next significant directional move. Always remember to implement sound risk management strategies, including appropriate position sizing and stop-loss orders, to protect your capital. Understanding both the macroeconomic landscape and detailed price action is paramount for informed trading decisions. Thank you for joining Explain the Charts for this in-depth analysis of USDCHF. Don't forget to like this video, subscribe for more market insights, and hit that notification bell so you don't miss our next update. We'll see you in the next video.